We are now at concept number 1. This is the very beginning, so please pay attention. Very simple, we first speak about the accounting umbrella. My learning pattern is always based on a lot of images, a lot of coloring, highlights, underlines, because it's always easier for our mind to recall that stuff. So the accounting umbrella is broken down into 3 parts. The financial accounting is one part of it, cost accounting is another part of it, and management accounting, which is our focus, is the third part of it. We'll take each one by one, showing you the difference. But just on the onset, let's first speak about management accounting. Now, management accounting is the application of the principles, because management accounting has a lot of concepts that we'll go through. So applying those concepts to create, protect, preserve, and to increase the value of a particular company that anyone is interested in. So a management accountant's job is to make sure that that company is run well in the interests of people who have invested into that company. Cost accounting, on the other hand, is straightforward, gathering the cost information to understanding the basic costs of each product, gathering all kinds of cost information to understand what is the cost of my product, how can I change it, how can I make it more accessible. All of that is part of cost accounting. Financial accounting, on the other hand, is everything related to finance. Preparing your balance sheet, preparing your statement of profit and loss. So the accounting umbrella is broken down into 3 parts. Cost accounting generally is broken down into and is used for your operational and tactical decisions. These are management terms that I'm introducing to you. Now, operational decisions are one which are made by low-level managers, day-to-day stuff. You know, how the business will be run, creation of accounts, and putting the entries in. Cost accounting is more for operational decisions. It's also for tactical decisions, which are for the middle level managers. It involves decisions such as, staff training, recruitment. Cost accounting is used for operational and tactical decisions. Management accounting, on the other hand, is a broader perspective. It aims to create value, right? So it's used for strategic decisions, long-term decisions, like what product should my company invest in? What markets should my company work in? Should my company diversify or not? So management accounting has a broader scope. Cost accounting has a focus scope on operational or tactical decisions. Since we are speaking about the accounting umbrella, it's important to speak about financial accounting as well. So financial accounting, as I said, is preparing of your financials, the balance sheet, the profit or loss. So it's generally for external use. You prepare the balance sheet so that everybody can read it. Financial accounting is generally a statutory requirement, which means it's needed by law. On the other hand, the management accounting decisions or material notes that is created by the managers is something which is decided by the board of directors. If they need it, they'll ask for it. Financial accounting, on the other hand, is legally required. So financial accounting is also governed by rules and regulations that are laid out by the law. For management accounting, there are no rules and regulations, because at the end of the day, that information is going to be used by the company itself. The company is going to use the information to decide whether it wants to launch a new product, whether it wants to enter a new market. That is purely internal. It has nothing to do with the law or government. So I just presented this to you to provide you the major difference between financial and management accounting. It makes your understanding more clear. Coming to one of the core reasons of this course is to help you understand the day-to-day developments in the role of a management accountant. It's vastly changing the entire accounting profession itself. So the whole accountancy profession is changing. This is especially true for the management accounting umbrella side. Earlier, accountants were only needed for reporting performance. Whatever the business did, they'll report it. They'll clearly put it down in the financials and report it. They don't help in adding value. But now, because of technology, because of the developing globalization and all of that, accountants are now expected to enhance the performance of a business. So, from simply reporting, they've gone to enhancing as well. As we learned in the definition of a management accountant itself, you are supposed to add, create, and preserve value for everyone who is interested in the business. So, a management accountant has to identify opportunities to enhance the performance of his organization. So, through this quick lesson, I aimed to help you understand the subsets of accounting, the three parts, what each part means, and what management accountant actually delivers to the accounting profession.